How's things?
All right, do we go ahead?
How's your week going? All right, Jason.
Doing, mate? Okay.
All right, cheers. Nice to meet you.
You, buddy? How's things, mate?
All right, good.
Good.
Fellow Welshman.
Yeah, can hear it in your voice.
Yeah.
Where do you live? Down south somewhere, I'm guessing.
Yeah, from the valleys.
Oh yeah.
Yeah.
Cool. We spoke to Garrick and Mark on that.
Yeah, well, Mark, I know Mark well.
Okay.
He lives about a mile from me.
Oh right, okay.
Yeah. So we've worked together in the past time, we know each other well. Well, that Garrick, he's over a different valley. I don't know him at all.
Okay, right, yeah.
I don't know him at all.
Yeah, Garrick and Jared, they're brothers, aren't they?
Are they really?
Are they both in the group, are they?
Yeah.
Yeah, yeah.
Yeah. There's a few of them. There's about 5 or 6 of them in that clique, I think. There's a few of them down there, yeah. How are you getting on? Are you just doing the banker stuff? Are you still doing HFX stuff?
Well,
I'm only doing FRX. I'm not doing HFX.
no, I've been in this group about a year now, and I've done the HFX, and instantly no, not for me.
Yeah.
But then, he sort of persevered because that's the way Sean was pushing people, which is a good way. There's nothing wrong with that. I thought it was good, but it was just like, I was trying to convince myself this is the way, but it wasn't. But anyway, so before Christmas then, I changed my package and then went to Pitchforks. And then, that's when I met Charlie on the Pitchforks groups. And again, it was just so very little, interaction with the Pitchforks. You only had chance going in and then nothing else. But then you had to be on the charts all the time.
Yeah, really time consuming. That was my problem with it.
Yeah, and I'd be in profit. I'd drive off somewhere, and then all of a sudden I got a stop loss come up on my phone. I'm thinking, what the hell is going on? So changed to the bankers then back in January being then, and it's going well. It's going well.
Good.
Well, I'm looking at 150 pips now this morning.
Nice. What are you trading?
Well, I've got about, I know it's not supposed to, but it's low things. 1, 2, 3, 4, 5, 6, 7 trades on.
Yeah.
They're all in green. They're all in green, and I've got
Good.
EN around 71 pips, AJ 25, GU 22, UJ 11, CATJ 10, EU 1.5, and AU 5.
How long do you hold these trades for typically?
Well, I don't work Thursday and Friday, so I tend to I'm on the screen most of the time then. So I just watch until things change.
Okay.
You've been doing really well though, Gareth, haven't you?
Well, it's like you said, when you can pay attention,
Yeah.
it goes well.
Yeah.
But it's like Monday, Tuesday. What is it? I would contract in 3 days, and so what they give me, they give me a 3-day job, and if I finish in 2 days, I start my week off on Wednesday. But it tends to get me to about, I try to get in the house for 12 o'clock midday on Wednesday, because I know Connor's on at 12.
Yeah.
That's my target. So from then, Monday and Sunday nights, obviously, Monday and Tuesday, I just like maintenance, just topping the charts up. I don't really trade.
Yeah.
And so it's from the Wednesday on, but I'm not fresh on a Wednesday because I've been looking at them, but I haven't actually traded. So, but I definitely found a pattern over the last few months. Don't trade on Monday because I'm shit on Monday. I just don't win anything on Monday. But then people talk then about don't trade Fridays, but I seem to have a better day on the Friday.
Yeah.
Always.
Yeah.
Because it's like as if it's been building up all week. And what I found is it's like as if they want to, it's like musical chairs. They want to move the chairs back into position, ready for Monday morning
Monday,
or
yeah.
Sunday night. Then, so
Yeah. If you can get,
When you listen to quite a few like professional type traders, there's quite a few of them don't trade Mondays. Quite a few don't trade Tuesdays either. I was always under the impression that Fridays were the days that not many people traded, but it seems like it isn't.
yeah, because I've gone back on all my losses, and a vast majority of them are on the Monday. I just stopped.
yeah,
and I've got to work now Monday, so I just
Monday's no good at all. I wouldn't trade Monday. I don't trade Monday. So it's actually a weekly cycle. So on a Sunday, we do markouts and then identify, just like you were saying earlier on about maintenance stuff, just keeping on top of it. And the Monday, you'll see a retrace. So if you want this indicator, it is this one here, the FXN week and day separator. It only works on the 1 hour. So see at the bottom, it spreads it out on different days for you. So see mine are in gold, Tuesday, Wednesday, Thursday, I trade. I don't trade Monday and Friday. So it doesn't always work, but I would say 99% of the time it works. So on a Monday, you'll get a retrace or a rebalance of last week's price action. And then Tuesday, which works quite well for you, Gareth, because obviously you said you don't trade until the Wednesday. The Tuesday, you can trade it, but it's pretty much quite volatile, I would say, because it's trying to find where it wants to settle. So, but when you come into it on the Wednesday, it's done the dirty work, if you like, and then you can play from there. But yeah, the Tuesday you usually see a high or a low in the market. Wednesday it'll do a reversal, and Thursday usually just let it do what it wants to do. You know, it's trying to go into like fill in IPA or take out lows or something. And then the Friday, I'm guessing, is where you're getting a lot of success from, mate. Is it pullbacks 20 to 30% of this week's price action. So
I got to be honest, that's fantastic to see, because at the end of the day, I've been doing this, since Christmas, and then you don't know if you're going the right way. You could be thinking, well, I'm having a lucky streak. But seeing it in black and white there in front of me is something you put on. It's just like, relief that it's not just me then. It is something, I've been thinking that's right.
Yeah, it's good, mate. Yeah, so like here, this was the Tuesday, that was your low for the week. Yeah, so this helped me massively. So just finding even the Tuesday low or the high, obviously depends which way. But yeah, that's your low to go off. And then nothing in that week came even close to it, so if we wanted to trade that, which...
Yeah, so you could have traded it off that low, couldn't you, as it came back down into it?
Yeah, so this one came very, very close to it. I've started to notice recently as well, these candles that come back in to mitigate out of the body, they're not always going into the bodies a lot anymore. They're just going into the wicks. So it's fucking annoying because you set your limit on the body, but like this hasn't got much of a wick. But yeah, if we might,
I always pad them by 5 pips because there was that many that I was just missing. It really annoyed me. So I've started padding. I would rather have 5 pip bigger stop than do all the work and miss the trade.
Miss a trade, yeah. So like this, see that tiny little wick there. If we move that red candle, there, that is literally come to the wick of this last down before the move candle. So it's not even come to the body. This one did, yeah, but you could have obviously got in on this one and then been in profit, fair bit of profit, and then slammed down to take people out again. That
would be news, probably, that candle, was it?
Yeah, I would imagine so, yeah. Oh, 7 o'clock.
It'll be FOMC, wouldn't it, 7 o'clock?
Yeah, I remember that one, yeah.
Yeah, Tuesday. That's about the only news that is at night, isn't it, FOMC?
Look what happens. It happens every time. So that's your Tuesday low. What happens on the Wednesday? What's it do? It's come up to the Tuesday. That's 6 o'clock on the Tuesday. What happens on Wednesday? It's reversed.
Yeah. Oh, this is a couple of weeks ago, isn't it? What date are we on there? Yeah, that's right. That was where I got in the euro that week. I thought I'd missed it because I was in off the candle you've got your arrow on.
Yeah.
That was where I had the order set. Okay. And it came down into there and I thought, I've missed it. And off it went. And then it came back. I went out, didn't cancel the order, came back and it got us in. I was well impressed.
Yeah, but it's the
Remember you
same
saying
thing
that, yeah.
over and over. You just literally see it everywhere. It's obviously this is part of the Wyckoff stuff. So you got your lows sat there. So liquidity is sat there. Yeah, it's the banks. Obviously, that's your FU candle. Fuck you.
Yeah.
Take them out. It pushes up. It breaks structure. And what does it do? It comes back to mitigate out from here. Yeah, and then away we go. That's it. So you look
quite often takes quite a lot longer than you think.
Yeah.
And
Yeah,
it quite often makes you think you've missed it, and then it's almost like a little spring, isn't it? And then it comes back and taps you in.
If you put depends how aggressive you are. I'm quite aggressive. I like tight stop losses, but even that's only 15 pips. Yeah, so if we'd have gone under that wick, great, because it did come back in to test it. But like go on to the hourly. So we'd be targeting up here to start with.
Yeah, there's loads of imbalance well further up. I thought it was going to go for ages, that one. And then I halved it when he broke, about where your cursor is there.
Yeah.
When he broke those highs, I halved the position and moved to break even. And then it came all the way back down and took us out.
Yeah, so what did that make? That went up to, there you go, that's a good trade, 125 pips.
Yeah.
Just about 24-hour move. If you're stacking it as well, I don't know how if you guys stack, or if you're twin trading, if you're risking 2%, obviously just put 2 trades on with one on 1% on the other one. But you can close one if you want, take money off the table, and then let the other one run. Obviously, in this case, it would have come down to our stop profit. This week has been not very good with the markets. It's like all the shit that's been caused last week with NFP, and then the dust is trying to settle this week. But we've got all this to come back in and fill in as well. So the 1 hour and the 4 hours is important to keep an eye on. So
what time frame are you marking up on a Sunday then? What are you starting on a weekly and working down? Or
yeah, usually weekly I don't really touch, to be fair. The dailies is a big thing for me. So with 4 hour or the daily, just to get an overall not trend direction, what the banks are literally trying to do. So obviously got this IPA. So this could possibly be our move, because it's this is why it's important to zoom out, because a lot of people will just look at here and see what's going on here, whereas what this is reacting off here is all the way over back from 31st of March when COVID first hit, which is the massive crash. Yeah, so it's rejected now off that candle there. So which is obviously the red line. So it's now broken above here. Broken structure, clearly broken structure. So I'd be waiting for it to come back, possibly into here. That's the last down before the up move, or even this one. That one, however, has been popped. So just think of these last down or last up as balloons. So that's your balloon there. This needle has come in and popped it, so therefore that one's not valid. So this one has got an ever so slightly bit of IPA in there between that wick and that wick. And what does IPA protect us from, or what's hiding behind the IPA is this candle, this down candle before the up move. Yeah, so we could possibly be waiting to come back into here. So we'd have that there, our stop loss below. It's obviously clearly broken structure, showing signs of bullish movement. So we ideally want it to come back. This could now be next week. Well, it will be next week now.
Will it be Tuesday, won't it, if that's going to be the low for the week?
Yeah, there you go, exactly. Yeah, so today I don't think it'll move much because it slows down, especially now. It's 2 o'clock. It'll start to slow down. You see a bit of price action. Sunday loop, and Monday will just hover. Much obviously a bit of sideways action for a few hours. Then Tuesday, like you say, you'll get your weekly low, I would imagine, connect into here, and then off we go to take these out. So obviously there's liquidity sat in there. We need to fill this imbalance, and the big one is take out these highs here. So that would be my first TP really, to take them out there. But overall bullish as well on the 4 hour. until that's your low really, until these get broken. We're still in a bullish market because that's created a new high there for that one. Yeah, so and what that really has done is created liquidity. So we can mark that out. So there's obviously orders there. There they go. So obviously we're going to take this up, and then obviously on the way back down, we're going to take all that out as well. So it's just a massive game of a seesaw, really. It's a game of table tennis, back up, but up and down, up and down, up and down. That's what I would be looking for.
It's just trying to read what they're going to do, isn't it? And then try and see what's the most probable cause of action.
That's exactly what it is. It's just to me, it's just a massive game of roulette, and it's if we can do anything to try and make it more probable in our favor, then great. We're obviously doing all these markups and stuff. It doesn't always work. Yesterday I took 3 losses, and it happens. It's just how the market's been.
One of my losses tend to be when I think like a retail trader.
Yeah, it's so easy though, isn't it?
Yeah, you think, well, I'm going to get in here, and then you think, well, there's a trend line there, and I said, well, you're going to train yourself. No, don't go for the trend line.
Yeah.
Don't go for the trend line, and that's where my losses are coming in. Yeah, you're going to get the ones that just totally go against you, which is bad luck, as you said. But yeah, in general, think like a bankers, and you're right. Think like a retail traders, and you will just. I remember one of the first times I was on the bankers, thinking, well, I sort of got all basics. I worked it back. I lost something like 30 trades in a trot. Now that's virtually impossible to do because flick of a coin, I'd have 15 of the 30. So I must be doing something right, but something fundamentally wrong. And that's what it was. I was trading bankers like a retail trader. So no wonder I lost every single trade.
There's a couple of times I've got taken out because I put my stop where a retail trader would, and the bankers have got my stop, and then it's done what I thought. That's annoying.
Yeah, no, they definitely try to take us out today. I mean, you got to be aware of that consciously all the time.
But now you know how it works. You can look at a chart and you could point to where everybody's stops are, because that's what they're doing, isn't it?
Yeah, I think that's where we're getting at now. We're getting experience now because we're on it constantly, and but you've got to train your mind to not to be a retail trader.
Yeah. I tend to either have a really, really good week or a really crap week. There seems to be nothing in between. And if I have a bad week, it's a really bad week.
The one thing, Jace, I do a lot lately, I seem to be fixated on the dollar index.
Yeah, good.
And I try to, I don't know if it's a good thing, constantly looking at it, constantly comparing it, or should I just have it on the back burner,
No, keep on looking at it. It's very, very important. I used to underestimate it a lot. So the dollar index.
What do you compare the dollar index with? Everything that's with the US dollar, or just certain ones?
Yeah, US dollar. So it does the opposite.
Every pair that's against it, but like USD CAD would be inverted, wouldn't it?
Yeah.
That makes sense.
I said last week, Charles, I had 220 pips. But I didn't trade until I waited for the reversal of the dollar index, and I just got in with 3 trades. Well, it was 3 trades then, including the dollars, and it worked. So I thought, great, But then obviously, if it kept on going down, well, no return, I would have lost 3 trades. So that's not great. But
well, the chart you sent me the other day, Gareth, with the split screen.
Yeah.
My screen isn't big enough to see those, so I'm going to get a telly and put it on a telly so that I can see on a split screen.
Mm-hmm.
But they are actually mirror effect. You see how I do? Actual mirror effect.
Yeah, identical. Yeah.
And the other thing as well is because we're learning, but at that stage now, I'm starting to learn the divergence and everything. Now, on the dollar index, you can actually see the divergence sometimes as well, but I'm not sure which way to go. Go with the dollar or against the dollar on the diversion?
It's the one that's last, isn't it? If there's a diversion, it's the one that's last, isn't it? The lagger, is that what they call them?
I'm not sure.
I think I've never used the divergence. I know what it is, but I don't massively use it. But yeah, just treat the DXY as the same as your Just mark it up exactly the same as Forex, as banker stuff. So we've got equal highs here, so they need to be taken out at some time. So we've got our last low here before the up move. Obviously, we're overall in a bullish trend, but just also be aware of, obviously, there's a lot of imbalance down here. So with bankers, it's never like 7, 10, 15 candles. Is either that one or it's going to be this one. Yeah, because the balloon's not been pinned. Yeah, there's no pin come down, so it's either going to come down to here and push back up and take these equal highs out, or if it's stubborn, it wants to come down and fill this in. So you could, mitigate out of that one, or you could actually come down to here, but that one has been popped. So the more probable one would be either this one or this one. I would say this one, because if it breaks below here, it's then break of structure, so we're changing the course altogether. So at the moment we're quite bullish, it's now reacting off here, so it's quite slow. It's struggling to push down here. So again, what's here? Yeah, IPA. What's it protecting? This candle here. There's always something hidden behind IPA or equal highs or equal lows. Yeah, look at this one. Equal highs here. What's it protecting? This stuff up here.
So it could come down and mitigate that one then, and then go back up, make an FU candle, and then
100%.
come back down.
So what I would expect it to come down into here, push back up, to take these out ever so slightly, and if we mark that out, just literally enough to take all these people out, basically. That lines up with close this, either that up, down, or that little tiny little noggin there, that up before the down. Move that to there. Yeah, there you go. That's literally enough to take people's stop losses out. And then I would imagine it's going to then drop from there to fill this one in. It does the same thing. It's just up and down, up and down, up and down. It's a constant, always the same thing. But yeah, the dollar index is very, very powerful. Gold doesn't really respect it. It does to a sense, but gold does its own thing. If you trade gold, gold is very volatile.
Let me let my dog out. Like, one dog's outside, one dog's inside.
Yeah, gold. I expected gold keep going up, but it's come back a long way, hasn't it?
Yeah, gold is. Gold.
I've never traded gold because I've only ever done the Forex, and this is why US 30 and anything else, I don't really understand it, because every time I had to go, I was never getting, the spread or the pip sizes are too big or too small.
Yeah, gold is.
It moves in a strange way, doesn't it? It's like a 0.25 a pip or something like that, isn't it?
Yeah, it's a minimum of a standard lot size on it, and that is basically, when you put a lot size on it, it's basically £10 per pip.
Yeah.
So if it moves like 100 pips, you're gonna make £1,000 basically, which is
I'll lose £1,000.
Way, but it's like I was gonna take this early on. Like here you can see it on the 4 hour, the last up 4 down move, but it's just ever so slightly broken above this body. But if you drop it down to the 1 hour, that candle is still there, but this is still not broken above this body here. It looks very bullish, and I think it's going to come up to here, to the 1800 mark. So yeah, around 1800. So obviously, again, what's this IPA? What's it protecting? This.
Yeah, fill all that in, then mitigate off that, and then drop.
Yeah, and then drop. So unfortunately, if we do take a loss here, we've obviously lost 1 or 2%. But if we take a trade from here, we're gonna get 14 to 1. So we're gonna gain 14% minus our 1% here. So we're up 13%. So it's, and if you twin trade it, obviously you could be up 25, 30%. So that's what I typically do. I twin trade all my trades. So 1% risk on this one, 1% risk on this one. So I'm gaining 14% off this one, 14 off this one potentially. Unless it starts doing silly things, and there you go, it's broken now. Don't think it's very bullish. There you go, it's going.
That was some news, wasn't it? The big drop on gold.
Yeah, massive. Yeah, huge. So
was that FOMC as well? Oh, it was rates, wasn't it? Was it?
That was Friday. It was NFP.
Oh, NFP maybe, was it?
Yeah, yeah. Somebody that used to be an IM. He made 43 grand off that.
Good, yeah.
Yeah, an old trade that used to be. What's his name? Cameron Lal, beast of a trader. Yeah, big money, but yeah, gold is very, very weird at the moment. It's moving strangely. I usually stick to the higher time frames, but when you do go for the entry, I do break it down just to try and get as tight a stop loss. Like that one there was on the 1 hour. So if we drop it down to 30 minutes, obviously now the last candle for the up one is in theory this one here, this tiny one. So it may not get up there, but it usually does. So if we mark that, and then
So you put your entry there and then you stop at the top of the wick.
yeah, so if you move it now, it's moved to what? It's now a 40-to-1 risk, 42-to-1 risk to reward ratio. So if you've got like 10 grand in your balance, you could be making 4,200 off that. Yeah, potential. It's but that's the benefit of the risk to reward. That's me. That's being aggressive trade. That is, yeah. So, but there's nothing wrong with that. You know, you're still gaining 40%. You'll never ever get that in anywhere in the world. So it's still fantastic with the returns. But yeah, I just don't like being in drawdown. But sometimes it kicks you in the teeth. You know, you think, oh, it's going to come up to here. It comes up to here and then drops. So you've missed the trade. So
would you never split it and put one position on the first one and one position on the last one?
Yeah, so I'd leave that one there and then put that one up there. So I'm getting best of both worlds, basically. Yeah, so this one.
I've halved mine a few times and done that, and it's worked quite well, to be fair.
Yeah, yeah.
You don't always get in them both, but at least you're in something.
Yeah. So this candle here was number 13. So does that particular move break structure? Yes, so it's pushed up and then down. What did it do? It broke the structure here, these areas here. Yeah, so why it's important is because the bank, we know it's more, again, just probability. We know it's more probable that banks are doing this because it's broken structure. Because to move that amount, news or not, I think it's bullshit. The market will do what it wants to do. Yeah, I don't really follow the news that much.
Yeah, somebody wants it down there, don't they? That's top and bottom of it.
Exactly, mate. Yeah, so if you've got fucking 50 billion behind you and you want it down there, that's the way you're going to push it. If the banks want it down there to mitigate out of something, which they can do and they will do, they have done probably something out of here, and that's what they've done. And they just time it all right. You know, it's just, oh, surprise, surprise, it happened on NFP day. So people just think, oh, yeah, it happened on NFP. Don't think nothing of it. The banks are literally absolutely insane.
I used to take loads of notice of news, and I don't really bother now.
No.
I take note of what's on what day, and then if there is a move, I kind of know what it is that's caused it. Yeah. But it's like I don't pull out now like I used to.
Yeah.
Because quite often it's the news that's tapped me in.
Yeah, true. Yeah. So look at that. Look, just because it dropped massively, if you go to the 4 hour, what's down here? Last down before they have candles. So they had to come down.
They know exactly what they're doing.
And in the process, what they have done is created perfect equal lows, which is liquidity. So, you know, it's scary what they do, to be fair. It's and the fibs is a good thing. You know, what does that line up with? Oh, surprise, surprise, 78.6 perfectly. Is in that zone. Drop it down to the 1 hour, you see it better. Look at that, literally pin perfect. You know, my red mark was that tiny little dot, my tiny little bar, wasn't it? It's literally pips apart. That's 78.6 key level. Yeah, so it's very strange how it all works out. And that also lines up with the previous last down before the up move. Yeah, and what I was trying to explain this the night, I didn't get it over very well. This is a perfect example of a remorse candle. Okay, so when it wants to, obviously here, it's pushed down and then pushed back up, right? So this is our last down before the last move. So what we would be obviously waiting to happen is for it to come down to here to mitigate out, and obviously what we would be looking for buys. But because that failed, it didn't happen, we can still use this area. It's now called a remorse candle. So rather than looking for buys off it, it's broken below. So let's go to, let's delete this fib. This is wouldn't say complicated, but it's still good to have in your armor. So if you mark that out properly.
That's in, I've never even heard of those.
Yeah,
Oh,
not many people teach it. It's a
No.
remorse candle. It's very powerful. So if this fails, remorse, yeah. So it's clearly, obviously, this was our last down, and then obviously broken the structure all above this. Yeah, so obviously, like normally, we'd be waiting for it, obviously, push up to there. Back down, and obviously we would be looking at buys, right? Because it's to take it back up higher, or even at least to there. But it failed. It failed to do that. So what it did do then is see this green wick here. So it's broken on a small time frame. That will be a body, yeah, not just a wick. So it has broken below this body, and then obviously definitely confirmed then that these two bodies broke below here. So now you can use this as a remorse candle. So rather obviously going for buys on this side, we're now looking at it from this side. Yeah, so basically you just flip that. You just now need to pretend that it's going to do this, which it did do. Yeah, so if you
So where did you learn about remorse candles at then?
I first heard it off Rock. So this was right in the start. Bear in mind, I've been with IM for about just over 2 years. So I've not heard anybody since, but I did a course with a guy about 18 months ago, and he went over it quite heavily. That was like £600 a course. Yeah, he taught me, well, in the course, it's quite heavily done. It's expired now, the course. I should have recorded it really, all on my computer. I could have shared it then, but yeah, the remorse candles, I'm sure there'll be stuff on YouTube. You just basically flipping it now. That one has failed, so we're not looking for buys. It's broken below, so you just use it the same way. So we're just waiting for it to go down, which it did do, broke down. So let's drop it down to a smaller time frame. There you go. So it's broken below, see there, and then come back in. Yeah, so
It worked perfectly, hasn't it?
yeah, so it did really typically, don't know if you can see that on my screen. It did obviously typically break below, to come back up, yes, to mitigate out of this one. But where did it all start from? This was the bad boy that was creating the move. Yeah, so you've got that little candle in there. Let's see what I rejected off. Yeah, so the remorse candles, it's they're very, very powerful. So if you take a loss, so if we were typically looking at, like I say, buys from here, obviously we would be having a stop loss below, let's just say there, looking for buys. It clearly obviously took us out of our stop loss. So therefore you say, right, okay, that one's gone. I've lost 1%. What can I do now? Drop it down to smaller time frames and see what's going on. Always remember, look left to trade right. So again, this is why it's important. Don't just keep on being stuck in here, because if you were, you missed that remorse candle basically. You could have taken a trade from here, you know, that's mitigated out of this candle here. But it's just down to probability. If you're going off that candle and that candle, you just double your chances, aren't you, basically? But yeah, it's very powerful when that happens. Most candles, yeah, I'm sure there'll be stuff on YouTube.
Strange name, remorse candle.
No, I thought there'd been a lot more than that. It may be in some of these videos, but don't fancy sitting there for a long time. That's another thing that you need to look out for as well. I've just seen that now. It's a bowl shape. So where are we? Entry requirements. Yeah, number 2, shape the market like a bowl. So when you're looking for entries or sells, either way.
I've noticed that Japanese pairs tend to do a lot of that.
Do they?
Am I just, just lucky seeing that, or not lucky, but just, am I seeing something that's not there? But I've had a lot of a lot of wins on Japanese by that, and they tend to be a longer trade. You know,
Yeah.
a couple of days.
Okay. So we've got this sort of area. Let's go on the 1 hour. Where are we? Around here. Yeah. Okay. So I don't trade much forex anymore. I do indices, so gold, US 30, oil, and silver and stuff. Looking at last down up, last up for down. It's broken structure. See the bowl has started to shape here. It's obviously come back nicely to mitigate. You're also looking for a bowl on a smaller time frame. So if we're looking around this area for entry, where were we? Oh no. Even maybe 3 minutes. Yeah, so you've got your ball basically dropped, come back up again, good pair of boobs there. And then yeah, obviously dropped. It has come back up again. So you're just basically smoothing off the ball. Yeah, so when you see that, and obviously break a structure, broke a structure, broke a structure, that's a perfect example of, you know, being able to stack trades. So in here, I would have got in off the mitigation candle, not right away. That's what I used to do, and then I used to typically get burnt. So let's delete this. So obviously this would have been our mitigation area, right? Obviously where it mitigated out the institutional candle. But so now that is our last up before the down move. I will let it break structure. What's it done? Come back perfectly into this one.
So you always take secondary mitigation?
Yeah, second, third, fourth. Yeah, just keep on.
But never first.
Taking them. Yeah, well, it depends how confident I am. I've been burnt massively before. Maybe me just being stupid, but jumping in right away, you know, taking that one right away. This one obviously worked, but you know, again, it's going back. Everything goes back to probability. If you're just going to take that one off the hook, it's pretty much 50% chance is going to go up, or 50% is going to go down. Yes, we can do our analysis, but we know the market only moves one way, two ways, right, up or down. So if you're think it's a ball like because you think, oh shit, I missed that move now, and you just got to be really patient. Yes, because
that's why I always think if I don't take it, I always think, oh, I've missed it, so, and then you never look back, and then you never see that it's
you only went 5
pips.
You know, it only went 5 pips, and it came back up to mitigate put once, twice. So you could have taken 1, 2 trades there, that one and that one, and mitigated twice. You stop loss above this here. So it's just, again, just a probability chance of it going our way, because what we did do is obviously mitigate it out of here. We waited for break of structure, which it did happen. It broke, you know, these here. Obviously didn't come above these highs, come back into here. So if you wanted to be extra careful, you could have maybe even waited for that one to happen. Yeah, so, and that's why it's important. All that mitigated perfectly out of there. See that one there? That up there. So yeah, that's why it's important not to move your stop loss to stop break even or stop profit too early, because if you would have done, let's say we got in here, moved our stop loss to that wick, it went down.
I usually move it to break even at break of structure now. That's what I've started to do.
Okay, yeah.
Because there was too many times it was getting to like 50 pips or whatever, and I was moving to break even, and then it was coming back and getting us out.
Yeah, that only moved 15 pips, which, you know, I don't know what sort of standard lot sizes you're working with, but
Pips for, you know, training season, you mean?
Yeah.
You know, 3 pip trading, stop loss and things.
Yeah. So if we would have moved our stop loss to break even, that would have taken us out.
Yeah.
So it's hard just to know when to move it and when to leave it, and you know, because like you say, if you leave it, it comes back up there and pushes back through up again. You've lost the whole bloody trade. You've lost all that profit.
That's the thing. Yeah.
So what I typically do now is I take off 80% profit from here and move my stop loss to break even. So if that 20% goes back up, I've lost maybe, I don't know, 300-400 quid. Yeah. So if it does come back up, and then doesn't take me out, it drops even further. Which did it do? Yeah, it dropped. Yeah, just dropped and dropped and dropped down to there. So we could have gained an extra 27, an extra 15 pips from there to there. But this is why I don't like forex pairs, because how long has that taken from there to there? It's taken 15 hours to move 22 pips, right? So if I show you oil, in 22 hours, what can we do?
Is oil a standard lot then?
Yeah,
Yeah.
oil in 22 hours, 9 hours, 12. 1 day, let's go back up, 20, let's go around here. So that's done 469 points. Oil works in points. It's the same as pips basically. So that's done 469 compared to some shitty fucking 30 pips on a forex pair. So we know which one do you want to take. If you put a standard lot size on that compared to a standard lot size on 30 pips, let's say, what were we looking at? GJ, wasn't it?
EJ, wasn't it?
I don't know what we're looking at.
Yeah.
It's,
The US 30 seems to respect bankers' rules quite well. Does oil do as well?
oil, no. Oil is very, does his own mind. It doesn't follow anything. But when it moves well. You know, it does pay well. But as long as you're using risk management, you're good to go again. You know, it's, yeah, US 30 works very well after 30 minutes. It works beautiful after 30 minutes.
Any special rules for US 30? I mean, bigger stop loss, same stop loss, exactly same rules as forex. Or?
Yeah. I do the same on crypto even. Trading Bitcoin at the moment. So yeah, it's on the 1 hour, is it? Came down to, yeah, so see mitigated out of here yesterday perfectly. Yeah, pushed up,
To the pin.
break a structure, come back down. Look at that, pin perfect. The pin has popped the balloon because what was here? Balance. The market always has to be balanced. Yeah, it could take for the years to come back to it, but it's clearly, and look what's happened again. Yeah, so that is slightly above there, but as a broken structure, no, so it's still bullish. Yeah, so this is where I used to get very, very, very confused because I thought this here would be break of structure.
Yeah, that's quite a hard one to get in your head, isn't it?
Yeah, but all that's internal low.
Yeah.
And I've just only sort of noticed this, sort of learned this last sort of 3-4 months. So now what we've got is that's your low and that's your high. So from there to there, that is your range. Okay, so from the low to the high, anything in between is either a internal low or an internal high.
I try and think of it as the low that makes the high and the high that makes the low.
Yeah.
And then it's anything else in between is just lower time frame noise, isn't it?
Yeah, really. And if you don't like the wicks, which I like to do sometimes, you can actually turn, if you double click on your candle, turn the wick off. Look how much nicer that looks on a chart. Oh God, turn the wick off. Looks so much smoother without the wicks. Yeah, but obviously you can't trade it because that wick got you into that trade there. But yeah, it's just noise, and that's what wicks is. It's a distraction from true price action. Yeah, the bodies is the most important part. Yeah, wicks is just a noise. Like you say, anything in between is just a noise. So to me, all this is just a pullback that's pushed up. It's a pullback pushed up, big pullback. Yeah, so see your M shape as well. That is a very, very, very basic. That is M shape. Yeah, and then obviously
it's going to break through and disappear.
It's broken above that body there. Is it broken? What we got? It should do on a smaller time.
It could take out those highs and then come back and mitigate all that imbalance again, couldn't it?
100%. That's what we're going for next. So yeah, that body's closed ever so slightly above that one. So we're still in an upward run. So obviously which one's more probable? So we've got this one to look at, or what's below it. Major IPA to fill. That all needs to be filled. So what's below that? What's it protecting?
At the bottom,
a candle down there. Yes, it has been popped straight away, but when you find you could have taken a cheeky buy from there. So when that happens, usually you find that it does want to come back to mitigate properly out of it. Because people don't really notice that, especially retail traders, they would be mostly putting their stop losses. Yeah, below that one probably last previous low. But yeah, IPA is strong here. So there's a lot of price action that needs to be filled. So back down to there and buy again. Yeah, it works every time frame, every pair. You know, the smart money is very clever. It's
But you're just piggybacking on the back of them, aren't you? That's all you're doing.
Yeah.
Trying to work out what they're doing and riding the coattails.
It could possibly even come down back to, if we have another crash, which doesn't seem impossible, it could come down back to here again. You know, I was actually in between two minds of it crashing down to the daily you're looking at.
They're way down in the 20s, isn't it?
Down to the 12,000 mark.
I was thinking it would get back to 20-ish, somewhere in there. I can't see it ever going below 20.
Look what's here.
Yeah.
Major liquidities, loads of liquidities out there. Yeah, so that all needs to be taken out. You could bounce off that one. Yeah, this is on a daily, remember. Could reject off there. You know, there's loads of different options, really. Yeah, I really doubt it will do, but there's nothing to say it won't do, because the back market needs to do what it wants to do. And if news wants, or Elon Musk even wants it to get down there,
Bankers, I'm guessing, because they need people putting money into it, they don't want to take us out completely. If we went down that low, people just wouldn't bother with Bitcoin ever again. So they've killed the golden goose then. So that's why I think they'll keep it up to a certain extent.
Well,
just to entice us to keep coming back.
They push it down there, and what happened in the last sort of 2 to 3 weeks, as soon as this sort of happened, every single Tom, Dick and Harry we're taking Bitcoin now. Like there's people in fucking
Amazon and all kinds.
Yeah, the Amazon, there's all just because he's on a bull run. Now down here, it's the shittest thing in the world. It's a massive scam. You're all losing money, you're not making money. But now it's all pushing up and people are making money. These big fucking people are making shitloads of money. So if it did come down here, who would be buying? A massive multi-billion pound whales with billions and billions of pounds, and then it would start pushing up again. Then all our retail traders would be getting in around this area. But where was the best deal? Yeah, it's a bit like going bloody shopping, isn't it? Where's your best deal? If you go from high to low, do you want 61% off your shirt, or do you want 89% off your shirt? Yeah, so obviously I know which one I want to take off. It's just better,
good way for it. Yeah.
It's a better rate for value, really. You know, getting value for money. So it is most probably more probable for it to push up now, because millions of people are getting onto it, and there's obviously massive bull run on the verge. But yeah, it could come up to here and drop down again, take them out. It may even just drop down to, like you say, what 20,000 mark, and then push back up again, because it does always need a correction. You know, it needs to correct the market. But yeah, it's just, we don't know. We can't beat the banks. We just trying to play alongside them, you know. And like where are we? Number.
I like your rules.
Oh yeah, number 19.
Read them. We're going to bed. You're sleeping on it now.
Yeah, eat off the crumbs from the sharks. The sharks are the big boys, you know. We're just a little fish, so we just need to make sure we're taking our pieces, because you know, if we can take that off the bankers' move, that's their move. But if we can take that, it's going to change our life. You know, we do that 2 or 3 times a week. We're making money from it.
Yeah,
you know, if that's all they're going to leave for us, then you know we'll happily take that, because you know definitely nobody in our group has got. I don't think so anyway. 500-600 billion pounds to play with. Oh.
No, I'm fairly sure they haven't.
But yeah, I don't know. Is there anything else that you majorly want to go over, or want to explain, or go into more detail?
Well, we initially wanted you to go over with the US 30. Like, I mean, is there any sort of rule of thumbs that's a little bit different with it, or I know I asked this question earlier, but like, sometimes when you get down to the nitty gritty, or there are little nuggets you can do. Because I've only ever done the Forex, so I haven't done the gold then. And the US 30 seems to be moving, as Charlie said earlier, smoother and follows the rules a bit more.
Yeah,
It always seems quite clean price action, doesn't it? US 30. There doesn't seem the mess that there is in some of the currencies.
yeah, true. Yeah, it just follows the top US 30 companies, isn't it? So it doesn't.
Yeah, just the biggest one.
It does follow the banks because you start thinking then, well, the banks, the US 30s, it's got the US dollars on his ass at the moment. So are these big companies changing over to crypto? So whether it's going to affect the US 30 moves, obviously it affects how well they perform as well, which is connected to obviously the dollar because obviously they trade in the dollar. There you go. That's another prime example of a remorse candle. Yeah. So I was looking at this broken structure. So what we would be waiting for is obviously for it to come back up to here and then to drop, right? But that failed.
Which is your remorse candle there?
This one. See
The
this
little up one.
See this one here? This
Yep.
other one up before the down move.
Yeah.
Because it broke structure. Yeah. So I was waiting for it to come into that yellow box for me to sell off. I didn't actually get into it. Yeah, and that's the prime example of not taking the first mitigation candle out straight away. Wait to see how it reacts, and then take the second one if you want to be very careful. So I was waiting for this to happen, but obviously it flew all the way through. Therefore, what we're doing now is rather than looking for sells, we're waiting for price to come back into here, because what's here? It's IPA, it's protecting it. Yeah, IPA is protecting this candle now. Yeah, on a higher time frame, which probably it is. Yeah, there's the last down there as well, just below it. So that's your area you need to start looking at. And then obviously on the 4 hour, that's just a standard candle. You don't even see the remorse candle. Yeah, it's just the last down before the up move. So that's why it's important to drop it down and change different time frames. So on the 2 hour, that's why that black mark is there. 2 hour. That's the open of the body of the last down before the up move. Yeah, I don't know what this one is, the one below. So this is just again, let's go for a buy. So if we had our stop loss below there, if we drop it down, see there's obviously something else in there. There you go. See that 1 hour there? So let's delete that orange. It's a tiny little candle there. So now our stop loss can go from entry, sorry. Again, it's up to you. So if you could have one there and one entry point right on this 1 hour candle. So this one is a 5.75 and this one's a 2.3. Oh, actually, let's move them. So let's target where we're targeting. If it dropped from exactly where it is now, obviously these would be the highs. So the previous highs would be here, right? So now we've got a trade of 17% growth and 6.5% growth. Now, again, it's well, let's put the fib on it. I bet that lines up with a 88.6.
Yeah, it looks like it does.
There you go, 89%. I just rounded mine off. So it's 88.6. It's 89%, pretty much perfect in that area. And remember, you're never going to get pin perfect every time. The banks are shifting millions of pounds every in seconds. So if it doesn't come perfectly down to here, and again, that's something I've been trying to get better at is, just because it's not pin perfect, maybe it's like 3 pips away, I take the trade anyway, because would you rather, add an extra 3 pips to your stop loss, but gain a massive trade or miss the trade altogether?
Yeah, that's what I've been doing.
Definitely.
You just got to, and that's unfortunately for a lot of people, they work in the day. So if you can get to it, get down to the 1 minute when price comes to that area, wait for that ball shape to appear and wait for the rejection, because it happens everywhere. Like, we've got rejection here. Yeah, so here was your last up or down, come up to mitigate. Yeah, if you'd have missed that one, or again being conservative, wait for this one. Again, it's come back up second time and then it's dropped. Yeah, and what we got? A nice, yeah, you've got one nice ball shape there. Another ball shape there. And then it's just dropped from there. Yeah, so you can see obviously it's broken structure. Yeah, it broke here to start with. That's your first indication. Obviously, this has broken these. So that was your low. That was your high. Obviously, that was an internal low. So that was inside your range. Yeah. Obviously, this is broken out altogether. Yeah. So if we had high here, that's your low, and this there's your internal low. Obviously, what it's done is this has broken out of this zone. Yeah, so that's a good indication of obviously it wants to break away to the downside. Yeah, so obviously you just have to wait for this. And remember, this is only on the 1 minute, so it's not going to take you that long. Yeah, so let's say you seen this happen,
an hour or
mitigate out
something.
there. You don't need to wait on 1 hour 21. So what you could do, wait for this to happen, which didn't take, how long is that? 20 minutes, 11 minutes. As soon as you see that happen, just put an alarm on, alert on, and wait for it to come back up into that area. If it does, it does. If it doesn't, there's another 68,000 bloody trades you can possibly take in the next month. Yeah, it is what it is. You've missed it. You missed it. So yeah, just set your alarm there. If it comes, go do a brew, go back to work, do whatever you're doing. Yeah, and if it comes back up to that area, then you can revisit it then. So if it got alerted here, we're now only taking 6 minutes to see. Oh, do you know what? It's come back to that area. It's showing signs of weakness. Yeah, because the candle just literally picked up. There's no strength in it. The bodies are tiny, and it just dropped. Yeah, again, if you're a bit too shy, just wait for you can see the candles dropping. You could even get into here because, let's go from, yes, you're losing, 2 pips, but for the sake of losing even like 10 pips, you're losing 10 pips from there to there. But to be safe, you've now gained 141 pips or points. Yeah, so it's just a bit of common sense, really. I'd rather wait 6, 10, 12, 15 minutes to see it's actually going to go my way than take the trade and think, oh shit, you know what, it's 50-50, may go the other way, may go down. You just pretty much gambling, aren't you? But just wait 10, 12, 15 pips and think, you know what, this is definitely going. It's broken structure. It's tried to come back up. It's tested twice. Away it goes. Yeah, and get in. So you're in a nice trade then. It's come back up again to mitigate out of here. Is it? I think it is. Last up before down. Yeah, around that area. So you could have taken that. Could have been another trade for you to take. It's clearly in a downward move. Yeah. So again, it's exactly the same happens here. So what's here and here? Fairly equal highs. What happens?
Yeah, if you candle.
Fuck you, candle. Thanks very much. Cheers. Because obviously all Tom, Dick and Harry's, they're retail traders, what they've learned off YouTube, where's their stop loss?
Yeah.
Above there. Yeah, thanks. See you later. Thanks very much. Bye. Down it goes. This comes back into here to mitigate out of it. Yeah, see that green candle? Big, strong, powerful. Obviously, I'm sure you understand what the candles are. It's good when they go up quickly and down can't slam down quickly. So you could have had an entry here even. Yeah, and again, if you weren't comfortable, like I say, what's happened here? Identical, the same place. Yeah, so you're just waiting for the second time. What's it done again? It's created highs to be taken out at a premium at another time. It's the same thing over and over and over and over. Yeah, so what did I just say here is fuck you, candle. What's happened here?
Yeah, another one.
Fuck you, candle. It's fucking the same thing, literally over and over and over again. Yeah, it tricks the retail traders. Yeah, we're pushing down, guys. Yeah, come on board. What's this to them? Support and resistant line. Yeah, oh yes, it's bounced off that area. Let's get in. Yeah, it pushes them. Where does their stop loss go? Just to there. It pushes them into profit of 43 pips, takes them out, and then drops in the way they go. And this used to happen to me all the time. I used to get fucking frustrated as hell.
Yeah, we've all been there.
Oh,
Definitely.
so yeah, you've got 1, 2, 3, 4, 5, 6 trades there you could have taken in that downward move in the space of, how much is that? Trade, let's go down to here. 10 hours. Oh no, 3 days, sorry. 3 days, 10 hours. But not, 6 days, that's two trades a day. And they've all made 1,870 pips. So yeah, 187 times 6. Who's good at maths? 187 times 6. 1,122 pips. If you twin traded that, obviously, if you would have bought 2 trades on there, 2 trades on there, two, yeah, so 12 trades basically, double it up. Yeah, so that's all you need to look for. Yeah, anything with equal highs, it's get taken out. That's the bank doing its thing. Same, it happens everywhere. Like even on the lows, sure we can find something. That's the 1 minute I just remember. So
I got one on, I think it was you, Cad, earlier. It was just on a 15-minute and it knocked a high out, so I just got jumped in.
yeah, there goes one there. So highs there, equal highs. There you go. Thanks very much. Cheers for the money. Yeah, down it goes. Broke structure, comes back up. We could have sold from there. Yeah. If I do about our stop loss, well, it depends how aggressive you are. That's dropped for 318 pips. That's a fucking good move, that is. 318
Fast
pips.
move as well, isn't it?
1 day, 12 hours.
Yeah, that's like 5 or 6 hours down, isn't it?
Or if you could have dropped it down to there, that's, what is that? 17 hours.
Yeah.
Yeah, if you're putting some standard lot sizes on that, that'll be £3,300.
Yeah, that's you for the week.
Yeah, exactly. That's where I again used to go wrong. I used to take 16, 18, 20 trades a week, or if sometimes a day, just fucking hammering. Some would lose, some would just like hedging against myself, just taking shitloads. Where you can now just take 1, maybe 2 trades, and that's why I don't trade Monday and Friday. Yeah, so there you go. Look at that. Tuesday low. What happened? Yeah, it broke above the structure, came back to mitigate, and what happened then? Above, buy. Yeah, so this cycle stuff, you really should look into it. Well, it's as simple as what I showed you early on.
Is this what you do on your sessions then?
Yeah.
When are your sessions on?
Monday night, mate. Half State.
Monday, 8:30.
I didn't know that. I didn't know you had a session.
I only found out this week, but I couldn't find out what time it was.
I've only been doing videos here and there, but I'm on YouTube for people to watch back. But yeah, since Monday, 4 days ago, I've started to do a weekly thing. Yeah, I'll put it in the chat next time. But yeah, that's perfect. Like Tuesday, nothing on. Well, Monday. Yeah, Monday. What do we have find on Monday? Rebalances. So Monday from there to Friday. Monday to Friday. That was a week before. What happened on the Monday? Retraces last week's price action. Obviously retraces last week. Tuesday we get our low. Wednesday what happens? Yeah, midweek reversal. So we get a push back up from the Tuesday low back up. Yeah, and then what do we get on the Wednesday? We're looking for our entries. Yeah, came back into this obviously in a smaller time frame. You get something tighter, and then on Thursday it push into the weekly trend objective. So what was the trendy objective? To get back up into these, take these highs out. Do that? Yes, 100%. It's the same thing over. It's just a massive cycle every single day, every week, every hour. I'm sure. I used to get dropped down to a lot of the smaller time frames. I thought, you know what, I wasn't losing a lot, but I was so sort of narrowly focused just on that. I used to get lost in the bigger time frame, and the bigger picture. Because the banks don't even do anything below 1 hour, 4 hour. They love daily stuff. Yeah, so they're just sort of sat at the top, and we're all the little army generals, basically, little soldiers. They're the big boys sat at the top. They're saying, go and do that. We're taking the small trades and they're taking the massive ones. Yeah, so if you start looking into here like this, fucking hell, on a 5 minute, say, you just get absolutely boggled down with smaller time frames. Now you're thinking, oh yeah, that's my low there, that's my high there. But in theory, that was your low there, and it's nothing wrong with it.
Easy to do though, isn't it?
You've got to be very, very, very keen. You've got to be on it constantly, I think, for smaller time frames. You can catch, the principle still stands. It works the same way, but you're only going to catch maybe don't know, 10, 12, 15 pip moves, which
And you're
is
sitting
fine.
here for that much longer to catch them as well, aren't you? Like to
Yeah,
wait
really.
to
Yeah,
see them setting up, you've got to be sitting here, haven't you?
yeah,
Whereas the Owlies in the 4 hours, you'll be able to see last night what's kind of close for today, won't you? So you
Yes.
can set your couple of alerts, and that's
Yeah.
kind of how I'm thinking about it now. I don't want to sit here all day long. I want an alert to go off, come back
Yeah.
to the computer, sort out what it's doing, and then and live life.
yeah,
Because Pitchforks, I was sitting here 3 or 4 days a week.
yeah. You just mark that price out. It's like you going into a business meeting. You want that price. Anything below that, no, forget it. No deal. You want price. If you mark that price out and you really believe that the price is going to come up to there, just wait and wait and wait. Last week, I had one alert go off. I've been waiting 26 days for it to happen, and it came in 326 pip move on GA. Yeah, so if I would have gone back into it and kept on watching it, I'd be like, oh, maybe, oh yeah, oh, I'll take that one, and it's maybe I'd have lost 2 or 3, but just wait do your analysis on a high time frame. It's, I would say, a minimum 1 hour, if not 4. Yeah, just see the big picture, what the bank's trying to do, where they're going next. Yeah, it's always the same. Yeah, and if you can, like, what are we? Number 10, point of interest or my sat nav. When we leave the house, if you don't know where you're going, which a bit in Forex, we don't really know where we're going, we need to set the sat nav. Where's the next stop? Yeah, so if we start, let's say we start up here. Yeah, we need our little roadmap. It may do a bit of this, but we need to go on that road. Yeah, how are we going to get there? Can go that I am. Yeah, so how are we going to get there? So you may have to just wait a little bit, take a little pit stop here, stop in McDonald's, and that's pretty much the market just doing that for a long time. Distribution and accumulation. It just drops again, and maybe it stops here again. You just need to understand how you want to get down to here. Yeah, in the meantime, you may very well be able to take a sell from here, maybe a buy back up, maybe a big sell, maybe 2 buys from there back up to there, and then eventually we get back down to there. So you could take 1, 2, 3, 4, 5, 6, 7 trades in that space on that journey that we're going to. Yeah, so you just need to understand, like I say, where the banks are going, where their sort of money is. That's the most important part. I think we all, have you watched Jenna? Yeah, she's like, where's the money?
Yeah.
Usually the money's sat in the candle that break structure. So this one up for down broke structure. Yeah, so they always broke structure. So the banks want to come back in to this area to get their money. Did it do that? Yeah, there you go. 100% came back into that area. Look at that. That took what, 30 seconds to do. Because what did they leave here? Imbalance. Yeah, imbalance is always so that from there to there. Obviously dropped massively, then came back up, filled our imbalance. Yeah, mitigated out the candle, and a massive drop down. That would have been a huge fucking hell. Yeah, that would have been a nice move. Yeah, it did take 62 days, but you don't mind when you're making that type of money. But mark it out on the 4 hour, because that's the overall massive direction. That up here, they obviously want to get down into this area somehow. Yeah, how are they going to do it? And then you start dropping down to the 2 hour. What do we see? It's a bit like a heart surgeon. I don't know why I use this example, but like a doctor opening up the heart and opening up the skin. He wants to see underneath. Yes, it's the same with the time frames. Drop it down. Yeah, what's going on? What's in there? What can we see? What roadblocks can we see? If we're just trying to get from here to here, what's going to stop us? Yeah, it needs to come down to here to fill that imbalance. Great, we'll mark it out. Did it do that? Yes. In that process, it left imbalance there again. Yeah, what was here last up before the down move? Let's mark that out. Let's see if they mitigated out of that. Let's go across. No, not yet. So just leave your markings in. Maybe that's something in the future. I'll do it properly. My proper marking. So I've just spotted that now. I didn't even know it was there. And what's above it or below it even? Again, IPA is protecting it. Yeah, IPA is always protecting something. either equal highs or equal lows. Talking about equal highs and equal lows, what's below the IPA? Perfect equal highs. They need to be what? Taken out. Therefore, this could be our move. Maybe from here down to here, mitigate again out of this area maybe, and push up, take this out, back up to here. Yeah, back up to that candle that we marked out. Maybe drops again. It's exactly the same thing, rinse and repeat, rinse and repeat. It's over and over and over and over again. There you go. What's this? Gold. Okay, so we've got IPA in here. Okay. Some of this. Anything else? You understand everything I'm going on about? 'Cause it's,
Yeah, that was really good.
Yeah,
Really
yeah.
good.
What I liked about it was you sticking to the true bankers, way. You didn't deviate, reverse fight with like quarter theories or anything. Although we understand that because we are experts for Wisely. But yeah, it was excellent because it was true bankers.
yeah, the banks. I don't really pay much attention to quarters theory really. But yeah, the banks love to play off the 20s, 50s, and 80s. So like they go around that area sort of thing. 1850, 1820. Yeah, so 1820 and 1800 dead, or 1900s, obviously key levels. What else we got? Yeah, where's the weekly anchor? Tuesdays, that's your low. Search and destroy, stop losses or orders. Yes, obviously our orders and liquidity is sat up there. Equals highs and lows, buyers, sellers. Most candles have done that. So supply is always on top. So I say that supply is China. Obviously, everything these days is made in China. So this is our supply area. Yeah, so let's mark that out as a supply area. Yeah, because let's say this is all United Kingdom because we're just absolutely shit country that doesn't produce anything. Do all this, we play around, but where do we go back up to? We always have a massive supply from China. Yeah, and who wants it? Yeah, us, demand in the bottom. Yeah, there's a huge demand for, I don't know what's hot at the moment on the market. These kids' toys, the popper things or something. Yeah, I've just bought some for my kids off Amazon.
Yeah, I bought one this week for mine.
Yeah, there you go.
Whatever the hell they're called.
What's in supply? Them things, they're all in schools. So where's the supply coming from? From China. Yeah, so that's our last candle up there. Where's the supply? Up here. So do we need to get up into there? Yeah. There's demand below because we're asking for it. The supply is at the top. So supply is China, demand is the UK. So ASL, ASH, sorry, or lows. So Asian session highs and lows. Pretty much every sort of time on the 6 hour. Where are we? So between early hours in the morning. Yeah, so around here, look, between 5 and around that area really. What just opened, London. Yeah, takes the lows out or the highs. That's always happens as well on the Asia session. That's not
nothing ever lasts in Asia, does it? That's what they say.
No.
Whatever the highs and lows of Asia are, always get taken out.
It's happened again, I think, there. So is that around midnight? Yeah, 1, 2, 3, 4, 5, 6 in the morning.
Is it midnight till 7 Asia?
Midnight, yeah, I think it's 11, is it? 11, I'm sure it's 11 a.m., 11 p.m., sorry, until 6 or 7.
6.
Yeah, and then that was a bit late, but yeah, same sort of principle. That was the New York Stock Exchange taking it out. Yeah, so that was 4 o'clock in the afternoon. But yeah, it always happens. Asia highs and Asia lows get taken out. There's not much relevance to it really, but it's just
interesting to know, isn't it? You kind of notice it once you know about it.
Yeah, and yeah, if you can obviously, let's say basically, well, there's no point fucking trading that because it's Asia. Well, you just again probability you're excluding that from your trade. So now we know we need to maybe just look at this. So yeah, so let's change this. maybe we just try to look at this. So, because what you've done here is you said, oh no, we don't need that. There's no point looking at it. So we could just basically cut that off and just look from here. So, why do we need to look at this, all of this now? It's not much, is it? But what, 6 or 7 candles when we can look at a less picture? Yeah. So there's no point.
I always think that if the high that you're trying to work out of is in Asia, then you need double mitigation, because there's a fair chance it's going to get taken out.
Yeah.
Isn't there? And that's often where your FU candle comes from.
Yeah.
And then you need to mitigate back into it again. So if you're trying to take a trade off something in Asia, you need something else.
Yeah, 100%.
Because there's a fair chance it's going to screw you over.
Yeah. Yeah, it's screwed over plenty of times. So that's not valid anymore. Well, it's hovering there, but I doubt it'll hold. So that's our road block. Yeah, that's blocking us. It may take a little bit of time, but especially now it's dying down now. The market is going Friday, it's slowing down. But yeah, Monday it should retrace last week, so all that price down here. Then we could possibly get a buy from maybe here. Yeah, last down before the up move. So on a Monday, remember, we get a retracement back down and then to push back up. Yeah, and that would be Tuesday at our high. Yeah, and what does that high do? It mitigates out of there, and then you can play off there. Yeah, so you can just maybe move all next week. We'll be looking for sells, on gold. And it's come back up into key level 1800 mark. There's 1800. Let's change its coordinates. 1800. Yeah, around there. Yeah.
Yeah, that's a nice round number that they bounce off quite a few times, isn't it? 1800.
Yeah, key level. Yeah. So it's just all these things that you just add in. It's just a massive jigsaw. It's just down to us to piece it together, really. Wyckoff is very powerful. I won't go into that. It's really, really deep.
Yeah, I've started looking at Wyckoff, but it is complicated.
Yeah, but
I've tried to draw odd bits up, and you think you've got it, and then when it plays out, you were miles away.
This is part of
so many of them everywhere, different time scales and different.
Yeah.
It starts to overtaking then.
Yeah.
I'm starting doing it, and have you seen that show? The Queen's Gambit, when she looks at the ceiling and she sees chess pieces. Yeah. I was like, I looked at Wyckoff to the ceiling. But no, I can't identify instantly. No, I'd like to get that point or something, but
I wouldn't overly worry about it. I've not, a lot of people don't use it. Even a lot of the educators on the academy, they don't even use it.
I think there's only 1 or 2 that do. I think, isn't there?
Yeah, this is part of Wyckoff. So your equal lows are created. Yeah, well, let me show you. Wyckoff.
I was talking to Connor about it a couple of weeks ago, and I was trying to kind of say to him that there's always going to be a Wyckoff drawing in an FU setup. There's always going to be one.
Yeah.
You don't always have to mark it up to see it.
All this, that's just absolute bullshit to me. I don't pay any attention to it. So equal highs, ST and phase B. So that's your equal highs. What is that? What's the spring taken out? Yeah, the bank's taking us out, the FU candle.
Yeah, and
then come back to mitigate. Back to mitigate. That's all I use. Test, spring, and ST and phase B. That's all. Yeah. Yes, none of this. I understand. I get it, but I don't mark my charts out with it really. I think
it is quite interesting to understand the theory behind it and what's actually going on.
Yeah.
Whether you need to mark it up every time.
That's Wyckoff for a sell the day that was. Look at that weekly high or low. So again, that was when? Tuesday.
Yeah.
Yeah. As soon as you start seeing these things, it's mad. The fib zone.
It just all pieces together. It's like light bulb moments, isn't it?
Yeah. I'm still waiting for this to happen. Yeah. So the fib zone from the high to the low, that's my fib mark. What happened here? Wednesday reversal. So Tuesday high, we got a push down. What happened? Wednesday reversal. What's in here? Last up before the down move. You could have taken that one or that one. I missed that one. I took this one. It fucking took me out. Yeah, last up before the down move. That's just schoolboy. There's nothing wrong with taking it. I took it from here. It dropped. I think about 15 pips, something like that, and then took me out. So that's the market's been a bit stupid at the moment, but I should have known better. It could have come back up to mitigate out there again.
That's what it took me up as well, yeah.
Yeah, so weekly objective, what's here? Look, high lows. So next week we'll be looking probably from this area for them lows to be taken out. Yeah, bang. And that's your low there. That's your ST in phase B. Your spring will be this to take out them lows. And then obviously at the moment we're looking at a bullish push up. Yeah. You just got to be aware of what's going on, like what's below IPA, what's that protecting. Last down candle here before the up move. There's another one here, a bigger one in here. But if you're using correct risk management, you don't mind. If you lose 1% there, you lose 1% there. Where's the next one? There's just roadblocks. Goes to the next one. If this one comes in and it does 18%, you're still up 16%, aren't you? Obviously minus 2% here. So you're up 16%. And I used to lose my head with it. Like, oh my God, I'm losing so much. I'm losing. And I used to just like throw my dummy out and I didn't come back and check. And then it fucking rejected off that one and it did a massive move that I thought.
Yeah, that's the trouble. You take your eye off the ball and that's the one, isn't it?
Yeah. So
there was 1 week that I only won 2 trades out of 10. And then when I worked, I thought, oh, what a crap week. And then when I worked it out, I'd actually made money.
Yeah.
So if you're catching the good trades, it all works out, doesn't it?
Not last week, the week before, I took 6 trades, lost 6 and won 6, and I was still up about £700.
Yeah.
So the risk management is good, and the risk reward is fantastic as well.
That's the thing that you're missing with pitchforks. The risk to reward isn't good enough to make any mistakes.
Right. Okay. Yeah. I looked at it once and thought, fucking no thanks.
You're risking 10 and sometimes you're going for 20 or 30. Well, it just isn't quite there. You have to sit on the screen and get every one to kind of make it work.
Yeah. And you don't allow for tracements either, because obviously they take you out.
Yeah.
So, the tracement, it could shoot off again then after the tracement.
Yeah.
But you're out of the game by that time.
And quite often did. And when you understand this, then that explains why, doesn't it?
Yeah.
Because it was coming back for another touch or whatever.
This weekly cycle, I'll put it in the chat now if you want to copy and paste it.
Yes.
I was going to ask you to do that.
I was, yeah. You're small there to see.
But I'm about 80% there with videos. I'm literally making 6 to 8 minute videos on each section of bankers. They're going to be all uploaded to YouTube. There's about 40 videos I'm making.
So what's your YouTube channel?
I don't even remember what it's called.
I looked for it one day and I couldn't find it.
This one, videos. Yeah, there's some bankers in here as well. So that was the Monday one that's just gone. That was if you want to watch that, that's 1 hour 40. There's another one. There's about 7 or 8 in there so far. I used to, I don't know when you guys came in, but I used to do a lot of mindset calls for the team. So if you're right at the very start you did, didn't you, when you first joined? I'm no guru, but it's I find it helps a lot. I'll copy and paste this link as well. How can I do that?
Well, it's something definitely I want to get into, but it's like I want to get into the trading first, and then I want a bit of everything, and then pull it all together at the same time. Then, bit like playing pool. You can either pot every ball, or you can put your balls over the pockets, and when you're ready, then knock them all down.
Yeah,
that's my type of mentality.
Yeah. So anything else you need to let me know? I'll catch you Monday. Oh, actually, will it be Monday? I may move it to Tuesday. I'm going to get a new car on Monday. I'll let you know.
I'll be on. That was absolutely fantastic.
Yeah, it was really good.
Anything else you just, or if you mark your charts up, just send them over to me. I don't mind looking at them. Or again, I'm nobody like Kumar, but if we can all help each other, it does help, doesn't it? You're not by yourself. There's nothing worse thinking, am I doing this right? Am I doing this wrong? Should I be doing this? Should I be doing that? It's nothing worse when you're a bit lonely. Doing the right thing.
Then you made it so simple, and it was simple to follow. But with us, we're looking at it live then, thinking, well, is it going to work? It's like it's fucking easy, but that's the point of where we are. This is why we had the Zoom with you, just as like getting us more familiar, get us better, keep us moving forward.
Just break it down to simple things, and then like you say, put it all together, and then it's like making a cake, in it. Get all the ingredients out, and then
each time you make it, you get a bit better.
100%. And we don't take losses; we just learn. It's a lesson. But, I'll leave that with you guys. Thanks for jumping on.
Thank you very much.
Thank you,
Cheers. Take care. Good weekend.
Catch you later. Cheers.